Welcome back. A unicorn, that's not rare. Privately held startup companies are no longer racing to publicly list their stock. In the past, IPOs have been issued and used strategically to accelerate growth, but recent years have shown startups choosing to stay private longer. Joining us right now is Zeta Global CEO David Steinberg. And David, good to see you. Thanks so much for joining us.
Thank you, Maria.
How's business? Tell us about the company.
You know, business is going really well. The business has grown an average of about 40% a year over the last 4 years. We're now 26 offices on 4 continents with 750 enterprise clients and 1,400 employees.
Congratulations. You
Thanks.
started the company with John Sculley, former Apple CEO.
As I always like to say, my partner John is much better known than I am.
And so where does the growth come from in the next 5 years?
So the single biggest trend that works for Zeta is the move from analog marketing to digital, right? So it's hard to believe, but today, analog marketing is still about 70% of global spend. 30% is digital. We believe those numbers are going to juxtapose over the next 10 years. You're going to go from 70-30 to 30-70. And our software platform and data platform help really power large enterprises inside of digital for customer acquisition and CRM. We do both.
Interesting.
David, we run a firm called Rosecliff Ventures, so we invest in early-stage companies, really focusing in the New York City area, and we've seen this boom.
Thank you.
Yes, seen a boom here. But I know you guys just did a big capital raise, and now over the course of the last few weeks, you've seen the IPO market really start to open up or loosen up. So does that change your thinking internally? So you have $1 billion valuation. Do you plan on going IPO? Do you plan? Or obviously you're watching that, but do you think that comes sooner now?
Yeah, well, I mean, listen, the last few years have been anemic for tech IPOs, right? The good news is they were up 100% in the first quarter of this year over the first quarter of last year, and they're mostly trading really well.
Not that you're watching.
Yeah, exactly. Well, the fact that I know is, kind of a signal. We have been doing this for 10 years. We have raised a lot of capital. We have a lot of shareholders, including institutional shareholders. And, we're always thinking about what the evolution of our capital structure would look like. And an IPO or something like that would be something we would probably consider if the market stayed where it was.
Got it.
Why have companies been increasingly staying private? What's the issue?
Well, being public is a pain in the you-know-what, right? I mean,
sure.
So the reason companies went public years ago, and I took my last company public, was access to capital, right? It's really simple, and we're seeing big moves this morning because the government has made the decision to allow capital to flow more freely into our economy. It's the same thing for private companies.
You mean the CFIUS news?
Yeah. But if you think about it, access to capital for private companies is greater than at any point in my career. And I've been CEO of 5 companies over 25 years. I started out as the youngest guy in the room. Now I'm the oldest guy in the room, except when John's around, thank goodness. But the reality is that the reason companies are staying private is we can raise large amounts of capital as a private company. And as a part of that, we can create liquidity for our earlier stage investors, which keeps them happy. So part of this is this ecosystem, which could be troubling for Wall Street in the long run, where you have far fewer public companies, you have far more capital in the private ecosystem, and you've got all these crossover guys now, which is guys who used to be public investors. They're now public and private investors. They're willing to come in. They're willing to do secondary for earlier stage investors. It used to be if you wanted to raise $100 million, you had to go public. Now, it's not a crazy amount. And you look at guys like Uber and Airbnb who are really leading the way as what we call the super unicorns.
Yeah.
Now, right? We're just a lowly unicorn.
You've raised some great points, but, as a venture capital fund, a big exit like an IPO is really helpful.
Of course, because you want to raise your next fund.
Right, exactly. Yeah. So I think there'll always be a need for that.
No, listen. Companies will keep going public. The profile of the public company will be more like a DocuSign and a Spotify than it will be even Microsoft or Amazon when they went public. I mean, people forget that Amazon, Microsoft were not even worth $500 million when they priced their IPO.
Incredible.
Right. It's incredible.
To what do you attribute all the money flowing? So much cash.
Well, there's a lot of money out there. Yeah. Interest rates have been very low for a long time.
Is that it? Is that simple?
Well, listen, it's I probably couldn't answer the question in the period of time in which we have here today together, but I would tell you at 20,000 feet, everybody's chasing returns. right? So private investment is showing substantially better returns than most public investment, as I'm sure you know, and you tell your limited partners all the time. The other big thing is the way institutional money is flowing is they come up with what their criteria for how they're going to invest is going to be. And a bigger and bigger component of that is venture and private equity. It used to be if you went to a major pension fund and said, how much are you thinking about around private investment? They would say 1% to 3%. They might now say as high as 20%. That capital flows to the fund managers who manage private investment. And then what happens is you've got this ecosystem. Interestingly enough, where he is has totally dried up. So the early stage investment groups are disappearing, while the growth groups are skyrocketing, which creates great opportunities for the guys who stay in it.
Really interesting. Great environment. David, great to see you.
Nice
Thanks so much.
Thanks so much for having me.
David Steinberg joining us there.